Manufacturing Index. Venture Corporation also maintains its net cash position has improved over the past 4 years, reaching 956.5 million Singapore dollars as of September 30th. Scan or click the link in the description to learn more about these stocks or join SGX Invest on Telegram for the latest news update. Please note this is a general commentary of historical performance and not necessarily indicative of future performance. Check out our investment courses that are up to 70% subsidized at cyberquote.com/sg or contact us at support@cyberquote.com.sg.
The Institute of Banking and Finance, or IBF, was established to foster and develop the professional competencies of the financial sector. IBF is dedicated to empowering practitioners with capabilities to support the growth of the Asian financial industry. It is the national accreditation and certification agency for financial sector competency. Developed by the industry for the industry, IBF Standards is a set of competency standards benchmarked to international best practices. IBF's vision is to be the Asian standard of excellence for practitioners in finance. IBF Standards covers 13 industry segments and offers a wide range of development roadmaps. IBF Standards offers accredited programs to guide a financial practitioner from licensing examinations to professional certification. IBF Standards certifies financial practitioners at 3 levels. An IBF qualified individual is one who is equipped with a broad base of capabilities and foundational competencies to undertake new roles. An IBF advanced individual is one who has acquired applied knowledge and complex analytical skills for specialists or leadership functions. An IBF fellow is an industry veteran who has demonstrated professional mastery and exemplifies thought leadership and commitment to industry. The IBF certification mark, a set of parallel elevation bars, symbolizes the close partnership between IBF and the industry. IBF certification is therefore an industry-endorsed mark of quality that recognizes individuals who exhibit professional excellence, integrity, and commitment to the industry. Be part of the IBF community of certified financial practitioners. Participate in continuing professional development programs. Avail yourself to learning resources to plan your career. There are also opportunities for mentoring and networking. IBF, the Asian standard of excellence for practitioners in finance.
Hey, a very good evening, ladies and gentlemen. Thank you for tuning in for this Tuesday evening webinar title, Riding the Eruptive Swings, while the market deals with the 4 big rises. For our keynote speaker, a co-founder and chief trainer from Asia Chart, and also one of the trainer who are teaching one of the course mastering explosive swing course fall under the IBF accreditation course, and also the associate trainer with CyberQuote since I think more than 10 over years. So do allow me to do a short introduction of the company as well as the keynote speaker today, CKE. Now, of course, for those who have been following through CyberQuote, you get to know that CyberQuote will start off our business since 1998, 20 years, right? And 1996, 28 come with your continuing support for those who are joining in like today, this evening webinar session. And of course, throughout these years, not only just providing on this corporate financial, the IBF courses, we also for the B2B level, we're also providing those IT security penetration test courses to the corporate level. Now, of course, like today, you're joining in for this 2-hour session by CK. Also, let me also take this chance to do introduce a little bit of the keynote speaker today, CK. Now, indeed, CK, he start off trading as a retail trader, just like you and me, in the year, I think, 1996. So it's just easily close to 30 years, right? 26 years. And of course, start off as trading by himself. And of course, he's focusing trading on the growth stock and momentum stock, which is actually, as of today, he's still doing the same, right? So in fact, doing quite successfully. So I think easily more than 10 over years back, he do a lot of physical events, thousands of participants who join in to learn from CK. In fact, he is a very few normal Asians have been invited by those Caucasian company to provide his market insight. So indeed, quite a successful collate achieved by CK. Now, of course, CK basically he is graduated in this field of the Master of Science from the NUS. But of course, he also portrayed with some certification called Certified Behavioral Finance. So that is actually helping a lot for him to in this field of trading psychology, especially for his trading since 1998 till now, right? Now, of course, today, this 2-hour session, we also connect into Facebook Live. For individual who join from Facebook Live, please feel free to post your question in the comments column. The individual who join via Zoom, yes, of course, you're more than welcome to post your question into the chat or Q&A. So, on the appropriate time, of course, CK would like to provide a reply to you. So we want to make it more interactive for the whole session. So please stay tuned to the end of the session because myself and CK are going to share with you how can you benefit from this Mastering Explosive Swing course, which is heavily subsidized by IBM, right? So without much delay, I shall cordially invite CK to take over the mic from here, right? CK, please.
Thank you, Andy, and welcome everybody to this evening webinars. Now, a lot of investors and traders actually told me that they find the market very confusing and very elusive. There seem to be a lot of contradictions and paradoxes. One expert said this, another expert said another thing, and they're very thoroughly confused. And when they're confused, you actually lead to inactions. Inactions means end of the day, you learn a lot, but you do nothing. Okay? So this is something which we experience, especially with social medias and internets, when what have you. We are just flooded with too much information. Today, I want to help you to make sense of the markets and more importantly, make things simple. One of the key observation is that many retail investors and traders, even including professionals, think to make things very complicated. They miss the obvious and the basic. So I want to go back to first principle. More importantly, we want to be able to find stock that can really run. Would that be good? Now, before I go further, just a very brief intro so that you know where I'm coming from. Like what Eddie actually mentioned earlier, I'm a retail investor, private trader, very much like yourself. I'm not a remiser, so you don't trade with me. I'm not a fund manager. I don't collect money from you. I'm not a prop trader. I still have to pay commission when I trade. So I'm just a retail investor, a private trader. Now, I became serious only in 1998. Prior to that, I leave everything to my wife because she happens to be working in the bank. Now, in the 90s, right, there's no internet. So information is real power. So I thought we are in good hands. So what happened was that in 1997 Asian financial crisis, she lost a lot of money. So I was just curious, how can that be? What about the expert? You see, the expert also lost a lot of money. So it was then I decided that I need to actually study and learn it myself, since the expert were not able to actually help us. So in 1998, I eat, sleep, and go to the washroom with a book on investing. I just cannot live without having a book on my hand. And I kind of committed to actually read at least 30 books on investing in that year. But I actually read more than that. I discovered something. This is something which I find extremely surprising. Being normal cannot make money. I repeat, being normal cannot make money. Market is never based on logic alone. So that's the reason why the thinking that go to trading, investing, and the thinking that go to your job and study are very different. But if you actually use the same way of thinking when you come to investing, you are likely to contribute to the market. All right, you can't make money. So that was a roots, what I call it, discovery. Now, I regret I didn't start earlier. Why? Because I missed the dot-com bubble. I was still learning. But I began to make consistent money when the bubble burst by shorting the market. Because coincidentally, at that time, SGS introduced SBL account, script borrowing lending. So we can borrow script and short it, not naked shorting. We can borrow it and short it for weeks, for months. So I began to make consistent money when the bubble burst. And in 2003 was easy because that was baby boom. All right. Now, if you know how to trade, if you know how to invest, right, it's not difficult to recognize baby boom. All right. It's not difficult. But it's just that when you tune to television and listen to the radio, become very confused. You don't have to be on. Okay. And I will share with you in this presentation. In 2006, I met two like-minded persons and we set up this company called Asia Charts to fill the gap in the industry. We feel there is lack of quality education out there. There's too much hype. This is something I do not like to see. There's too much hype. So we decided to fill the gap in the industry. Together with my associate, we have trained more than 10,000 students in Singapore, Malaysia, Indonesia, and Vietnam. These are the places I conduct physical workshop. Now, this is not to impress you, but to impress upon you. I've been around for quite some time. This is the first time I got featured in Straits Times, August 2008. First thing first, we don't offer get rich quick scheme. We live our principle in teaching what real trading is all about. Now, it's very easy to tell you the untruth, very easy, but it's difficult to tell the truth. The fact that you're here today, I believe you're above national average. You're more interested in the real stuff about trading, not the hype. Again, I got featured, that was in March 2009. I have no idea, this is half a page of Straits Times, it's not advertisement, I didn't pay a single cent for it. The journalist called me up. He said, you're recommended by the industry. I don't know who recommended, and interviewed me and went down to the hotel where I conduct workshop and took this photograph. And before I realized, it appeared in Straits Times. Now, there's a caption here, you cannot see very well. Let me just blow it big for you to see. People looking for get-rich-quick scheme must not turn to trading as wrong mindset. It can be dangerous. I repeat and repeat to the journalists because I'm very serious about what I do. Now, trading, investing is a skill set. You got to remember that it's a skill set. Just as, for example, if you cook very well, that's a skill set. Right? If you play football very well, that is a skill set. Okay, if you draw, paint very well, that is a skill set. But do you spend some time? Do you practice? Of course you have. Investing is the same thing. So do not wait until you are free, then you learn the skill. You'll never have the time. You must commit one. Okay? So remember, it's really a skill set, no? Okay, and you do it consistently. You don't have to put too much time, okay? But you got to do it consistently. You commit the amount of time that you're comfortable, and you trade the time frame you're comfortable. All right? I don't expect everybody to become a day trader. No. In fact, I discourage people to do day trading. Subsequently, I got featured in Business Time, regional newspaper like Modern Post, Xingzhou, Dongfang. Company and myself was actually featured in the program in Channel News Asia a couple of years back. It was a half-an-hour program, and it was telecast 5 times. I was invited by Thomson Reuters to be the keynote speaker for the event. I was invited by Bloomberg to analyze Shanghai market. I was also invited by Macquarie Research to do market outlook event. Now, these are big institutions. They are not experts in their office, but they still want my opinion. So it was extremely humbling experience to be invited by these major institutions. So this is just a brief background. Now, when I first started in 1998, the first person I looked towards to is this gentleman. I'm sure you know him, Warren Buffett. So what happened was that after reading the materials about him and his way he approached the market, I realized one thing. He only made his fortune after past age of 60. He bought his first share at the age of 13. I say, my God, only at the age of 60, he made his fortune. Okay? And I also discovered something. Whatever he do is not really just a strategy, it's a lifestyle. And his lifestyle is not suitable for most Singaporeans. I'm not saying you cannot emulate him. I'm just saying it's not suitable for most Singaporeans. This gentleman is a filthy rich man, but live like a poor man. All right? So this is really a lifestyle. Don't get me wrong, he's very generous. He donated most of his wealth away. But I realize in Singapore context, I think majority doesn't like his lifestyle. We still like to spend, especially if you drive. Okay? Now, if you want to actually follow him in Singapore context, you probably cannot drive because it doesn't make sense, because it's a depreciating asset. All right? You probably take public transport and you probably stay in HDB, but you're a millionaire, staying near to MRT station, so your kids don't have to actually take any kind of transport, don't have to take school bus, they just take MRT. Right, so it's really a lifestyle, and I realize may not be suitable for most Singaporeans because most Singaporeans will still love to spend the money. All right, I'm not asking them to be extremely what I call it, big spendthrift or extremely thrifty, but I like to actually spend some of the money you make. All right, and especially Singapore, we focus a lot on education, and I rediscovered there was a root shot again. Children education is more expensive than university education. I don't know where is your age, but when my kids was very young, I realized I spent a lot. When they go to university, I don't have to spend so much. All right. So I realized this person, his approach may not be suitable. I look around and I discovered this gentleman. His name is Ed Sugota. And a lot of people don't know him. Now, he actually turned $5,000 to 50 million in 10 years, and that is 300,000% gain. He's not alone. This is Richard Dennis and William Eckhurst. They turned $400 to 200 million in 10 years, and that's 500,000% gain. I said, this is outrageous. $400 everybody have, but 200 million. That is crazy. Now, they are not alone. You have Michael Marcus, 250,000% gain in 10 years, and you have Bruce Kovner, one of the best hedge fund manager in the world, 87% gain per year for 10 straight years. This is almost doubling every year. And this person in particular make a very serious, make a very serious commitment. He only allowed to be featured one time only in a book to set the record straight so that journalists will not bother him again. All right, he's actually featured in the book called Market Wizard. And he actually set the record that I do this because I don't want the journalists to ever come to me again. So all these people, you notice, a lot of people do not know them because they have a common philosophy, which I like. They make money without having to know what happened tomorrow. I repeat, they make money without having to focus too much what is likely to happen tomorrow. And that caught my attention. So I don't like to be actually focusing too much on the news, focus too much on what happened to this, what happened to that. Don't need. All right, and this is what I like. So my approach is generally in line with their philosophy. Okay, so to cut everything simple and short, I quickly jump into it. First thing first, why market go up? Like for example, today STI go up. Why go up? Market go up because money is flowing to the market. Of course, the professional like to use a proper term, liquidity. All right, but it's actually simple term, money. Huh? So why market go down? Money is leaving. That's all. Money in, money out. Huh? Three major sources of money. First source of money, people saving, investing more. People like yourself, very thrifty, save, and then what? You go and buy share, build your portfolio. First source of money. Second source of money, people, institutions shifting money from other kind of investment. If gold is no good, you sell gold, you buy stock. If property is no good, sell property, buy stock. If bond is no good, sell bond, buy stock. So there are only a few major asset classes and they are just floating around on the money. Third source of money, central bank lower interest rate, increase money supply. Three sources of money. So central bank will be US Federal Reserve, Bank of Japan, ECB, these are the central bank. Three major sources of money, 1, 2, and 3. Which do you think is the greatest source of money, ladies and gentlemen? If you can, I'll appreciate if you just type the chat box. If you don't know, never mind, you just guess, gut feel, it's all right. All right? If you can type into the chat box, 1, 2, and 3, which do you think is the greatest source of money? Anybody? Wrong answer, no punishment one. Don't worry. Huh? But for the fun of it, we have some interactions. Huh? So at least I know whether you're with me or not. Anybody want to guess? Seriously? Anybody? Three major sources of money. Can type into the chat box. I promise you, no wrong answer, no punishment one. Thank you, Chua Kok Peng. Really appreciate you responding. All right, your initial also I like. Yes. The central bank lower interest increase. This is the greatest source of money. Now, probably you read from the paper, Federal Reserve has intention to cut interest rate in June, that kind of thing. All right, and before they cut, market already run. Okay, and Bank of Japan, okay, they have increased the interest, all right, from negative to now slightly positive. And ECB also has intention to cut interest rate. So the central bank actually has the greatest power. They press a few buttons, they print a lot of money. But the central bank do not print money and then go to the stock market to buy share. It is the institution that take advantage of the cheap money and go to the market to buy share. So remember, central bank is the largest source. Institution take advantage of the cheap money to go to the market to get better return. Is it okay? So because of this, we are interested what the institutions do with the cheap money because the action are shown in the chart. So make life simple. Huh? Now, the next thing you need to understand is, so really end of the day, you just have to think, if there are a lot of cheap money in the market, the stock market is going to perform well. Okay? Now, the next thing you need to understand that is this cycle. Market is always in an endless cycle and there are 4 stages to the cycle. Number 1 is basing, number 2 is advanced, number 3 distribution, number 4 decline. 4 stages, okay? Easy to look at a diagram. This is called basing. Stage 1, stage 2 is called advanced. You can call it bull market. This is distributions. Stage 4, decline. You can call it bear market if you wish to, and go back to basing. So these 4 stages will repeat again and again. The next cycle could be taller, could be shorter, could be broader, could be narrow. I have no idea. I just know that there is one of these 4 stages. Now, never stay in 1 and 3. 1 and 3 don't stay there. It's a waste of time. It's very choppy. It's really a waste of time. Stay aside. Now, stage 2, you go long. Long is not to buy long term. It's to buy. It's not long term. It's not long term. It's just to buy, long trade. And stage 4 is short trade. Okay, so here you buy, here you sell short. If you don't know sell short, stay cash, don't buy. Is it okay? So remember, stage 2, you long, stage 4, you sell short. Let's look at S&P 500. This is from 2003. Stage 1, uncertain. Now, when market is actually unsure, uncertain, you go sideways one. Okay? Now, what happened was that during that period itself, when they declared desert storm, if you remember that time it was this Middle East war, Iraq war, Iraq went to actually invade Kuwait. So the Allied forces came in, and when they declared desert storm, clear already, market run, March 2003, stage 2. Okay? And then what happened was that somewhere over here, there are a lot of distribution, stage 3, and there was some problem already, and then we have the subprime crisis, stage 4. Severe sell down, and somewhere over here, found a support, stage 1. So during this period, actually central bank, in fact, on the way down, central bank already cut a lot of interest rate. Cut until it's so cheap. That the institution decided to take advantage of the cheap money, and then we have stage 2. Okay, let's continue. This is still currently stage 2, all right? And then here we have stage 3, went down stage 4. This is the bear market not too long ago in the US. Okay, so there's 2022, and then 2023 start to actually move up stage 1, and then stage 2. So recently we have correction. Don't freak out, it's still stage 2. All right, correction is normal one, just like this. Just like this. All right, normal one. So of course somebody who saw this, seen this line there. This line here is wondering what is this? This is 40-week SMA, 40-week, 40. All right, very slow. On the daily chart, it's 200 days. This is Nikkei 225, stage 2, consolidation stage 3. And then you don't fail. Stage 2, this is the black swan, this is the COVID. Then you go back, stage 3 again, and then move up stage 2. So right now, it's still stage 2 for the Japanese market. This is Singapore. We have this, what do you call that, COVID crisis. Here we have stage 2 and then stage 3, and we are stuck in stage 3 for quite some time. Now, having said this, now what happened here is that because there's net, all right, zero inflow or outflow, right? So that's the reason why it goes sideways. But having said it, this represents 30 component stock. Singapore is more than 30 stocks. So there are stocks that outperform this. There are stocks that underperform it. We are interested in finding the one that outperform. So you must understand, there is, market is always in an endless cycle, right? So you just have to understand which stage you are in and don't do the wrong thing. Okay, don't do the wrong things, because if you do the wrong things, it's very serious, right? And a lot of people say this is a strong stock. There is no strong stock, weak stock, because eventually, strong stock will go to stage 4, become a weak stock one. Clear with this, like some of the Hong Kong stock, very obvious one, Tencent and Alibaba. They struggle for a long while, right? And they may not even hit the previous high. Very difficult. So never fall in love with stocks, okay? And don't bank on luck also. So next thing is ask yourself how to position. How to position yourself. Right? You understand the big picture, how to position. Ask yourself this question: is your investment backed by a sound strategy? In today's context, anybody surf internet, anybody trade online, anybody with social media account, you're flooded with all sorts of recommendations. And there are many of these are scam. Right? You're flooded. It looks genuine, really damn good. Look genuine. And I'm very confused. So today you follow A, followed by B, and you follow C, followed by D. You just don't know what to do. And if you listen to too many, you go every direction. And you're thoroughly confused. So if you go all directions, right, the result won't be good one. And because of this, right, 95% of investors actually lose money over time. This is not Singapore statistics, this is worldwide. But this is what happened. The bottom 50% are compulsive loser. Compulsive loser. All right, these are the gamblers. The next 40% are the people make some, lose some, plus the commission they have to pay, they actually end up actually negative one. It's only the top 5, top 10% that actually make consistent money. So most people are stuck here. These people keep come and go one. Come and go one. They are the one that contribute. Right? It is where the smart money, all right, take advantage of this. Okay, and of course, these people here, a lot of people can start here for years. Some start there for decades. Start there for decades. And they have no idea why they're still there. All right, and they're trying to find out how they can get in there. So I hope that you're interested to be the top 10%. Can I assume that? Okay. So having understood this itself, remember you want to be the top 5%, top 10%. Okay, now we cannot be, of course, everything is possible. We are just interested top 10, top 5. The wizard are top 1%. These are the international, what do you call that, champion traders. Okay, so we want to be consistent. All right, the top 5, top 10%. So where should we focus in order to be there? Where should we focus? It doesn't matter whether you trade short term, mid term, long term. There are certain fundamental you need to know. You need to know. Even if you are somebody who generally want to actually collect dividends, you need to know also. There are certain quite fundamental you need to know. Okay. So where should we focus? Now I'll show you this diagram. I don't know whether you can deduce from here. Where should you focus? If you look at this diagram, what comes to your mind? Now, usually whatever comes to your mind, right, the first thing is usually correct. Now, if you say there is motion, you're right. If you say there's momentum, you're right. Absolutely. So focus on momentum. Okay, focus on stock that can actually move. That's important. So why momentum? An object in motion tends to stay in motions. Now, remember, we're interested what the institution do with the cheap money. Okay, now when institutions go in and buy a company shares, okay, they done their research, buy the company share. They don't buy one time. They don't buy one time because they have deep pocket. If they buy one time, the price will spike. They will try to slowly acquire. Hopefully, nobody knows. Slowly acquire until they become major shareholders. They have to declare. Okay, but they will still continue acquire if they believe in their company and company performances. Okay, so why about they continue acquire? And because of this, they tend to stay in motion. Okay, don't buy any dead stock. Buy stock that can actually move, and these are created by institution. Next, stock has this behavior. There's a tendency to move in the line of least resistance. They find the path of least resistance. So it's just like a car. It's easy for a car to continue to move forward than to stop and reverse. So for the car to continue to move forward is so much easier. To reverse need a lot of energy. Same with stock. Next thing, why momentum work? Before there's a change in price, there must be a change in momentum. Now, everybody's interested in the change in price. But before that can happen, there must be a change in momentum. So that give me a clue. Why focus on momentum? Now, let me show you some example. Now, this is what I like to do. I would like to actually show example from the past right to the present. Okay, for one simple reason. I want you to really appreciate that stocks are just in one of the 4 stages in an endless cycle and never fall in love with stock. Why? Because they are market leader, many market leader in the past, they did not perform subsequently. All right, only 20% of the past leader is likely to repeat. Only 20%, so the all is no good. Okay, for example, Costco. Momentum works. The stock went up 8,000% in 4.5 years, but it's gone already. It's in stage 1. All right, this is AEM. Everybody know this company, Semicon. Momentum work. This stock is gone. It's on stage 4. This is Tencent. Everybody knows Hong Kong stock. Momentum work. This is Tencent. Momentum still work, whether up or down. Positive momentum up, negative momentum down. Huh? Is it okay? So you focus on momentum, it is moving. The only thing is the direction that you're interested. So you must know which stage is it in. So why momentum work? Natural buyers to strong stocks. When the institution buy a company share, they are interested in making sure that the company they invest in has good earning. Right? Has good earning. But they're not interested in just earning per se, profitability per se. No. Earning momentum. That means the current quarter must be a lot better than the previous quarter. And the subsequent quarter must be a lot better than the current quarter. So there must be earning momentum. There must be growth in their earning. That's very important. If you're making money, but you're not really increasing the profit, right, with substantial margin or large enough margin, they are very brutal. They will just dump the share and move on to other things. Right? So that's the reason why some people always say, if this company is doing well, I look at this, I study this, it doesn't matter. Institution is not interested. When the institution is not interested, the stock will never go up. So you got to understand this. Hopefully from here you understand why Tencent cannot run, why Alibaba cannot run. Because institutions by and large are not interested. When I say institution, I'm not talking about one. It's a collective action of the institution. Collective action of the smart institution. All right. Next, the technical traders are also interested in momentum, but they're more interested in price momentum. So notice all the smart people are looking at momentum. Now, you find it difficult to understand. Let me give you a very simple example. If you go to a hawker center, which you have never been before, and looking for very good food, what would you do, ladies and gentlemen? If you want to actually get good food in a hawker center, which you have never been before, what would you do? It's pretty obvious. Everybody got this experience. We look at the longest queue. All right. And the longest queues happen to be fish soup. And you like fish soup, you actually queue. If you don't like fish soup, go for the second longest queue. So what happened was that actually, after you finish the food, there are 100 stores here. You can go and do your interview and you ask them, all right, how you come up with this recipe, how you source your ingredient, how you make your sauce. This is called fundamental analysis. Okay, now, don't get me wrong. There's nothing wrong in doing fundamental analysis, but I only know one thing. We can never do better fundamental analysis than the institution. You agree with me? We can never do better fundamental analysis than the institution. But there's something we can do as a retail investor. We can see what the institution do with the research because their actions are shown in the chart. So you simplify your process. So my advice is that you don't have to do the 100 store, just do the first few at long queue. What's the point of interviewing a store that have no queue? Clear? So you cut down the time. Huh? Next. Why momentum works? Participate in strong sector in different part of the economic cycle. Now, if you're in the markets for quite some time, you notice there's this thing called the sector rotation. Okay, very obvious example during COVID, which is strong. Healthcare stock and tech stock. Remember, we cannot leave our house. Everybody use technology to communicate. And obviously, healthcare has performed very well because why? Everybody needs to be masked up. So glove manufacturer, mask manufacturer all perform very well. Then subsequently, when the crisis is over, then what perform well? Recovery team, your cruise liner, your airplane, all right? Isn't it? Tourism related one. Genting start to run also at that time. Huh? So recovery team, all right? So subsequently, you have also the technology also start to run as well, still continue to run. And then later you have the AI thing, they start to run. Okay? So you notice there's this rotation. Then of course, when you have the Red Sea crisis because of the Middle East war, then you notice a shipping company run. So if you can understand this and you participate in the strong stock in the strong sector, then what happened? You got highest return, right? Isn't it? In a shorter time. So it's important you know that which is running, which sector is performing good, because you want to be in that. So the return can be higher and time used shorter. So in order to look for stock with momentum, you look at the market leader. Okay, market leader, because market leader is like a lead horse running in front. I call them the champion stock because they are in front. Now, a lot of people know the 80-20 rules, but they do not know that you apply to the stock market. 20% of stock capture 80% of the gain. In any market, there are only a few large winners. I don't care, Singapore, Malaysia, Hong Kong, US, the same. In any market, there's only a few large winners. The rest are just mediocre. Don't need to focus on them. So your life becomes simplified because you focus on the market leader. And if you look at NASDAQ, right, it's outrageous because that few musketeer, right, the weightage is more than 30%. So instead of 20-80, it's probably 10-90. Very skewed to one side, isn't it? So whatever the case may be, just to remember, in any market, in any time, there are only a few large winners. Okay, so why the market leader, why the champion stocks? Quick momentum moves for short-term trading. How is this? When the institution buy a company share, it calls ripple. This ripple allow you to do short-term trading. Price appreciation over time for mid-term investing. Now, how is this? So stocks with the shortest momentum. Now, what happens when the institution buy a company share? They'll continue to buy, build position. So the ripple will transform into wave. The wave allow you to do longer term investing. Is it okay? All right. So you're using your same champion stock for short term, for mid term, and because they tend to repeat, you can actually do it consistently. And consistency is very important for compounding. Again, I'll give you an example from the past or the present, and perhaps you can relate with them better. All right. And again, I want to actually emphasize, never fall in love with stocks. This is Ezon 2013. The stock rallied 700%. This stock is gone and is suspended, but it ran 700%. This is Osley 2014, went up to 45. This company introduced shoebox supplement. People go crazy. All right, it ran very well, but this stock is also gone. This is InnoValue 2015, 350%. This company should be doing well if it's still listed. It is so good, it's taken private by competitor. Somebody bought it over. Now, this is CMC Gomai 2016. Bank of Japan introduced negative interest rate. And central bank also of Europe, Europe central bank also want to introduce negative interest rate, and people go crazy with gold. And Singapore CMC gold, my stock only 2 months, 178. 2017 Sun Power, 120%. Nobody believed that actually a Sun Power stock, a solar power stock can run so well. So again, don't have too many opinions. You have too many opinions, you can't trade. This is China Sunsing, 2018, 120%. Again, a lot of people don't believe a stock called China Sunsing can run. A lot of people are very fearful of Chinese stock. Now, this is Global Investcorp 2019, 200, 300%. Now, this is something you can remember easily. During the COVID, the PPE manufacturer performed very well, and this is meant that 1,600%. When the STI is down almost 20%, this stock rallied 1,000 over percent. That's 2020, and subsequently 2021, you have Grand Venture. Nobody believed Grand Venture can outperform AEM, High P, UMS, Franken. Grand Venture, same industry, 2022 Yangtze Jiang. This is the first time a blue chips outperform 100%. Okay, and last year best performing stocks, Dynamic. Ask yourself, did you participate in any of these stocks? Ask yourself. If you do not participate in any of the stocks, then something is not too right about the way you select stock, because you don't select the leader. Okay. Let me just show you the list. 2017, AM 400%, High P 270, Alignment 265, Sunrise 155, Elixir 132, UMS 117. Now I'll show you the list. I want to draw a lesson so you can learn better. So it's always good to actually have case studies so you learn better. STI not too bad, 11.2. Take a look at the stocks here. AEM, High P, Sunrise, Ellipsis, UMS. Anybody can tell me which sector it belongs to? Which sector it belongs to? So you notice actually these 5 stocks, right, are all semicon related one. They're from the semicon industry. Okay? So it's important for you to participate in the strong sector because your return is going to be higher and shorter time. The only odd one is Align Mineral. And this company deal with mining, and in particular, they mine lithium, which is used for EV, electric vehicle. So again, people go crazy with EV and people go crazy also. So there is also a very strong sector. All right, it's just that Singapore, we have a few of this stock. The other one is actually Fortress Mineral. Again, I'm not too sure you're familiar with this. All right, now 2019, you have Global Equivalent almost 300%, Rector 272, AM 145, Bankway 139, Frankel 134, High P 73, and STI is very pathetic 3.2. You look at the difference. These are few 100%. This is only 3.2. So can you understand why it's important to invest in leader? Now again, you take a look. This is AEM, this is Franken, this is High P. They are from the same sector, semicon. So if you're not participating in some of these stocks, then again, you miss the game of actual stock selection. This is October 2020, or stock in October. Remember, this is COVID year. You have Mentex 1,400, UG Healthcare 1,300, Jiutian is 600, Downgrade 342, Riverstone 369, iFast is 259. STI is negative 18%, which means actually it's a bear market very badly. It dropped very badly. But take a look. This is 1,000%. This is negative. The market go no good, no good, down 18%. But the stock way outperformed. No. So can you understand that? Right? Now, the other thing also you can take note. Do they belong to a certain sector? This 4 stock. Anybody can tell me what sector they are? So they are the PPE manufacturer, glove manufacturer, healthcare stock. All right. So if you're not participating in this 4 stock, then again, you need to fine-tune your stock selection. Okay. Some people say, I never trade Mentek before because I never heard of this company. I also never heard of this company until COVID crisis. But it's okay to trade. It's okay to invest on. Just don't fall in love with stock. It's okay. So it's a cycle. This stock is gone. This stock is all gone. They're all gone anyway. Right? Help me to remember Mentek. Best performing stock. If you wish to, you can take photograph. I pause here for a second. If you wish to, you can take photo. I pause here for a second. Let's continue. This is April 2021. I start in April for good reason. Southern Alliance 175, IFAS 124, Fortress Mirror 100, Del Monte 300, 171, Innotech 67, SPH 63. STI second best after Taiwan 30.2. Again, look at the difference. The difference is staggering. This is 100%, this is only 13.2. So the leader is way ahead compared to the broad market. Huh? Now, these two from the same sector, they are iron ore company. So I detected this. And this is the first time I trade a company called Southern Alliance. Before that, I have not traded this stock. I trade this only first time. I purposely stock in April because a lot of people don't believe that this stock can outperform the other stock they are more familiar. This stock way outperform. And the things most unusual is SPH, best performing blue chip. Nobody believes that SPH can outperform the other blue chip. Why? Because fundamentally not strong. Again, you have too many opinions. I only see the chart. All right. And then from there, I look at the fundamental. Okay. So help me to remember SPH the best performing blue chip in 2021. Stock is cheap. Later, I'll show you. Okay. And this is what we trade, SPH. If you have too many opinions, you will just miss this stock. You probably will not trade Del Monte, Hardwell, and Innotech. And Innotech way outperformed the other tech stock in Singapore at that time. Just to complete it, 2021, Grand Venture, Medtech, Hourglass, IFA, Southern Alliance still there, Sabudara, Protnect, SCI 9.1. Again, the difference, huge, man. The difference is staggering. Fast forward 2022, again, this is very interesting. Yang Zhejiang, almost 100%, Sembcorp 69, Capricorn 42, Bestworld 40, Jardine 38, CTL 25, and UOB is 14. STI is very protective, 4.1. Look at the difference. Again, very huge. Now you look at these stocks here. Look at these stocks. Can somebody tell me, are they related in some way? Are they related in some way? Anybody can tell me? Something to do with color. Something to do with color. Color of the sky. Anybody want to venture to guess? Color of the sky. They are related. They are related to each other through this color. Now, these 6 are blue chips. Right? I'm sure you know they are blue chips. And we have 30 component stocks. And these are 6 here that way outperform. Remember, STA is only 4.1. Meaning, if you were to choose other blue chips, your return is going to be pathetic. Only these 6 blue chips way outperform there. The STI is only 4.1 there. But remember, 24 cannot really perform. No? Is it okay? Let's continue. Help me to remember Sembcorp. I'm going to show you more. And Bestworld. Bestworld only start to trade only last 3 months, October, November, December. And yet it outperformed 40.6%. Do you trade Bestworld? A lot of people has their own narrative. Oh, this stock, network marketing, suspended 3 years. They're not touched. You miss them. Again, I will show you later on. Last year, Dynamic 74, Pro Empire 63, Sembcorp 56, Capricorn 55, IFAS 53, Franken 42, Delphi 39. STI negative, no? Negative. All right. Again, help me remember Food Empire, Sembcorp. All right. And I will discuss also Dynamic. Just for completeness, look at Hong Kong. Last year, best performing stock. A lot of people look at the list of stocks here and never heard before. You probably heard of Broadway. This stock here, Broadway. And Hong Kong is one of the worst market in the world, down 30%. Okay. S&P 500 last year. Again, you notice they are all related except for this one. The rest are all tech stock. Right? Leading by NVIDIA. NVIDIA 185%. But this S&P is 24. Look at the difference. The difference is huge, right? Isn't it? So next, what is really a good training system? So we do that systematically, top-down approach. What is a good training system? How are we going to approach? What is our methodology? Now, I actually created a very unique methodology. I call it the expectation trading or expectation investing. What is expectation investing? Expectation investing that before the market open, I must have the answer to the following question. Number one, I must know what to buy before market open. I must know when to buy at what price before market open. Is it $1? Is it $2? Is it $2.50? I must know how much to buy, part of risk management. I also must know, if I'm wrong, how much is my loss, worst case. And I also must know when to get out. I must have all this answer before the market open. Now, I have all this answer before the market open. Is it okay? Now, after I enter the market, I look for two actions. Number one, when to buy some more. And lastly, when to get out. Now, if you know and you know what you're looking for, how do you feel? How do you feel? You have majority answer before the market open. And after you enter the market, you look for this action. You know where to look for. You're more calm, more confident, and more composed. Now, I discussed the how, but I did not explain to you the why. Why do you think I do expectation investing? Anybody? Why do you think I do expectation investing? Now you see, before you enter the market, you have all control. You can choose which stock to buy. You can choose what price to buy, how many shares to buy. You have all control. But once you enter the market, you lose all control. The only control you have left is to get out. Is it okay? The only control you have left is to get out. And because you literally lose most of the control, you will experience psychology discomfort. And these two monsters will appear, fear and uncertainty. So that's the reason majority of people actually cannot make money. Why? Because if your decision is come from a state of fear, kind of state of uncertainty, you cannot make good decision. Right? So that is the reason why even very smart people, if they don't understand, they cannot make money. Because a lot of people, they make the decision out of fear, out of uncertainty. Everything seems very nice. But once you enter, and the stock didn't perform according to their research, and they don't know what to do. Even very intelligent institutions, they don't know what to do. It's a fact. So that's the reason I mentioned being normal cannot make money. Okay? Now, through expectation investing, this is what we do. We cut this down. Is it okay? We cut it down as much as possible. We cannot eliminate, but we can actually minimize. Now, let's go down further. How are we going to actually capture this explosive move? That is our focus. Remember, we want to find stock that can run. They have momentum. All right? They give you explosive move. What happened to my PowerPoint? There are three approaches. In the interest of time, I'll do two: reaction swing and momentum swing. Okay? So you're going to drill down. The Pacific. Now, not all stock can do this. Only the champion stock can do this. Only the champion stock. All right? Because of institution. Now, whoever bought a stock earlier has a tendency to take quick profit. Again, these are human winners. There's a tendency to take quick profit. People who bought the stock many years ago got trapped. And right now, notice the stock start to run. They want to get out also. All right? So because of this, there is this action, reaction, action, reaction, action, reaction. All right? So this portion here is a reaction, action, a reaction, action, reaction, action, reaction, action, reaction, action. So we are interested in the action to launch our trade. And this move is not small. This type of move like this can be 40 cents. No? 20 lot is 8,000. No? It's above the median salary of a working executive. No? All right. You don't have to be active. You just have to be proactive. Again, very obvious example, reaction, action, reaction, action, reaction, action, reaction, action. This move like this is 10 cents. 20 lot is 2,000 in one day. Okay? Very obvious reaction, action, reaction, action. Again, sometimes you can move 20 bars 1 month. 1 month. Huge. Okay? Not too long ago, we have stock like iFast. Not too long ago, we have stock like SIA. They run very far. And right now we have bank stock doing the same thing. I don't know whether you're invested in bank or not. Later we discuss. Now some people say, I got no time. No time is okay, man. Look at weekly chart, 1 week, 1 bar. Same thing, reaction swing, action, reaction, reaction, action. 1 week, 1 bar. You can hold the stock for months. Huh? Is it okay? Same, this is one of the best performing stock. Semcop. Action, reaction, reaction, action, reaction, action. This stock is gone already. Don't fall in love with stock. This stock has been running for the last 3 years. It's gone. Next, momentum swing. Momentum comes from motions. So over here, can you see there's motions? I position myself here. I go long here. Okay. Objective is to buy at the right price, where the risk is the lowest and the odd is the highest. Is it okay? And the right price very often is not the low price, and the low price very often is the wrong price. Now, a lot of people like the low price. Some people say, why don't I buy here? Buy here, by the time I reach here, I already make money. So if you like the low price, you could have bought here also, right? That's low, right, at that time? Nobody have high side. So you bought it actually at this price here, then what happened? It moved down. After it moved down, what happened? You don't feel good, right? Isn't it? So when you buy here, your objective is to make profit. Am I right? By the time you reach here, your objective change. You are no longer interested in profit. You're interested in no loss. Why? Because psychology, you're weakened. So when the stock recover to break-even price, you get out. After you get out, market seems to no run without you. Anybody got this experience? Anybody got this experience? Anybody got this experience? Before you sell the stock don't run. After you sell the stock run like mad. All right. So a lot of people do not understand. All right. There's nothing to do with market. There's something to do with you. All right. And because you do not know, you succumb to those emotions. And that happened. And we have a lot of cognitive bias. Most people are not even aware of their cognitive bias. There's a tendency for them to do the wrong thing in the market. Nothing to do with IQ. All right. So very intelligent people also commit the same mistake. Next, I'd like to show you this example. So some people say, but CK, why you showed me an example so long ago, 2014? I show this because you can relate to this better. Now, this company was shot down by Muddy Water. Muddy Water is a short-only company, short-only fund. They shot down this company, and they said the company is not honest, not transparent. They recognize their profit incorrectly, so it inflated the result. So after they made all these accusations, the stock collapsed. Stock collapsed. One fine day, I see this run. I noticed there is momentum. I saw that the volume has picked up. I position myself over here and I go long. I position myself here and I go long. All right. You tell me, if every day you listen negative news, would you buy this company share? Would you? Honestly, ask yourself. If you read all the negative news about this company, would you buy the company share? A lot of people would, but I don't care. Why? I see that the smart money is inside there, and I see that the motions here, so I put position here. I have no idea it's going to gap up. That's a bonus. And finally, the answer appeared. Temasek inject a lot of fund to rescue this company. I have no connection with Temasek. I do not know anybody at Temasek, but I can see their action. People in the know already bought. I position myself. So a lot of people are influenced by the negative news relating to Olam. So a lot of people don't trade. So if you're very easily swayed by the news, again, you may not trade. I will show you more example again, so you can understand better. Now, before I go further, I thought maybe I want to make sure you understand. If you look at the right side of the chart here, all right, look at the right side of the chart here. Can you tell me whether there's motion or not? Yes or no? Whether there's motion or not? All right, there's motion, right? Is that right? Now, if you cannot see it, let me know, because I want to make sure you attend this webinar, you get real value. Well, that's important. All right. So you notice there is this move, and remember there's a gap. General rule of thumb, trade in the direction of the gap. Is it okay? Trade in the direction of the gap. So I position myself here, and when it trigger, I go long. All right. I just trade accordingly. So I take advantage of this. Now here we have a gap also. I position myself, but nothing happened, so I didn't trade. Is it okay? All right. So general rule of thumb, trade in the direction of the gap. Same here. Chinese aviation, very nice. I position myself, I buy here. It still hit a high here at 148. This move is 30 cents. 20 lot is 6,000. No. More than somebody 1 month pay. So there's no point trying to actually buy here. A cheap buy. Then we got frustrated, right? So when you move only, you quickly get out. And then get out again, you run without you. So a lot of people always succumb to this. I see too many, especially those forum and public seminar which I conduct. A lot of people always ask me this question. So I know a lot of people cannot overcome the urge to buy high. They like to buy low, all right? Because they don't understand the market cycle. And hopefully you can remember I go through the 4 stages of the market cycle. Huh? Same here, strong inbound trend, break, enter the position. Stock hit a high 312, 4 day 40%, 1 day 10%, that's hell a lot. Hell a lot. Now by this time a lot of people say, but CK, I also know buy here, sell here, I also know. Buy here, sell here, I also know. Here don't buy, don't sell, I also know. With the high sell, all very clever one. Am I right? Yeah. So I will show you from the past right to the present from here onwards for one simple reason. I do it day in, day out, year in, year out. I never change the strategy. Why? Because I trade the psychology behind the bar on the right side of the chart. It doesn't matter. The psychology of the investor have not changed for 1,000 years. So you continue to be the same. Okay. Let's take a look at this high P. Now over here, we have a gap breakup. Stock moved up. Now, if you know the stock beforehand, which I mentioned, this is called expectation trading. You know the stock beforehand, high P, and the price to buy is 75 cents. You know the answer already. What can you do, ladies and gentlemen? What can you do? Can you infer a reminder break 75 cents, buy 20 lot for me? Can you see stop limit order to execute the trade automatically? Stop limit order. Can you see alert now? Can you set alert? Can. This is exactly what I do. I set my alert high P 75 cents. I know the answer is 20th July. Now this is 19. 20th July is here. So on this day, I know the answer. This day, I know the answer. So I waited 1, 2, 3, 4, 5, 6, 7, 8. On the 8th day, 2nd August, 9:56, I received this alert. I check the chart. Oh, there's a morning gap. And here, the volume picked up. I go long. Stock closed at 80 cents. This is 15% move. Now, I purposely highlight the stocks because the first entry is here. After this gap, a lot of people freak out. They don't have trade. This is the second setup. This is the third trade. This is the fourth trade. By the time I reach here, a lot of people say very expensive. They dare not trade. Anybody in this room has problem buying high price? Anybody in this room has problem buying high price? Anybody? I'd like to help you. Anybody in this room has problem buying high price? According to research, 80% of people cannot buy high price. 80%. So it's the same thing here. 80% of the people in this room cannot buy high price. This is understandable. To help you to overcome, let me share with you. You bought a stock at $1. This is you. Your friend bought the same stock at $1. This is your friend. You bought a stock here, you make money. Your friend bought a stock here, lose money. Why? Same stock, same price. Why you make money, your friend lose money? Never mind. You let your friend buy 50 cents. Your friend still lose money. You let your friend buy 30 cents. Your friend still lose money. No? On the other hand, you buy 150, you make money. You buy $2, you still make money. How come? How come you buy so expensive can make money? Your friend buy so cheap cannot make money? It's not the price, right? Isn't it? So, but a lot of people still fixated on price. All right? If you're still fixated with price, you can't make money. You only make money based on luck. Then the stage 2 will come. Don't focus on price. Focus where the price is going. Is it okay? Don't focus on price. Focus on the direction of price. They help you to be on the right side of the market. Hopefully, through this simple example here, you can overcome your fear of buying high price. Next example, high P. I set my alert here, 73/12 of February. It triggered 3 later on 15 right here. Stop breakout 1, 2, 3, 4, 5. I sold the shares. Why? $1 is psychological resistance. Why? Everyday gap up is a bubble. Why? Singapore contra 5-day, about time I sell. There are 5 reasons. I just give you 3. Okay? Let me repeat. Trend exhaustion. Every day there is a gap, cannot sustain. Psychological resistance, $1. Time exit because Singapore contra 5-day. Even in US, there's no contra, but there's a 5-day cycle you got to remember. Somebody say, hey, but CK, how come no MACD? I don't use that. How come no RSI stochastic? I also don't use that. I just do this only. All right? So I do not use those indicators. The most I do is moving average. That's all. So I just trade the psychology behind the bar. Huh? Can see on it? Yes. I'll show you more example. Again, I highlight OSIM for a very good reason. A lot of people lose a lot of money with OSIM. Why? Because fundamentally very strong. Valuation very high. So you buy below, valuation is very good. To me, very simple. There's a gap. Trade in the direction of gap I mentioned earlier. So here I short the stock. I set by alert 267. On the 1st September, it triggered on the 4th. 3 days later, I short the stock. The stock eventually plunged. And I get out of the bull bar here, and that is 37%. Most people lose money, but I make money by shorting the stock. And this stock is a favorite of a lot of investors. All right. So I get out here. Why? Because this is an exhaustion move. This gap is too huge. This is the end already. SMRT, you cannot find this stocks. You cannot find this chart. Again, I use this to explain so you can understand better. In 2015, is MRT service good or no good? In 2015, is MRT service good or no good? No good. Every other day breakdown. If you want the breakdown, the pedestrian, the commuter have to walk in the tunnel, right? Isn't it? And in one location, the tunnel got flooded also. So the service was very bad. Now, when you actually receive all these bad news, right? You read the newspaper, would you buy the company share? Honestly, would you buy the company share? A lot of people will not buy, but it doesn't matter. For me, I look at these things. One fine day, I received my alert 6165. Alert was set on 20th November. I put 3 star. It appeared 2 months later. I forgot about it. I take a look at this thing. I said, the volume picked up. My God, I go and buy. If every day got negative news, would you buy or not? A lot of people won't buy. But I buy. Why? Because I see actions of the smart people. Stock continue to move up. You can see the very high volume. Eventually, answer come out. LTA bought over the SF or SMRT. Is it good news? Yes. Who knows? I don't know who knows. SMRT officer, LTA officers. I don't know who these people bought, but I just trade accordingly. And over here, I sold my position. That is a 10% move. Why I sell my position? Because there's a shift in sentiment. So I look at this without looking at indicators. I know there's a shift in sentiment and I get out. I lock in my profit and go look for elsewhere. This is venture. These are popular stocks. Everybody know about it. I set my alert here on the 14th of September. It triggered next day 15 right here. Stock power all the way up here. I sold my position, 33%. Question asked, how can I tell that the move has ended after the strong move? Now, those people do candlestick. Is this a strong candle? A lot of people say, oh, these are very strong candles based on what I have read from books. To me, this is a sign of weakness. Why? Institutions are selling. And this is a power gap, which is gone already. All right? I get it. A lot of people don't get it. Why like that? Institution selling, why are you holding? Here, this one is Ping An, Hong Kong stocks. I set my alert $91.17. It triggered next day on the 18th right here. Let me just share with you. This is a resistance, very obvious. This is a gap. Can you see the gap? When you break through a resistance, there's a reaction. Can you see the small body? So there is a jog. So because of the jog and the gap, I don't trade. I wait. I set my alert on the high of this bar. The next day it trigger, I go long. Here I sell the position. How can you tell the move has ended? Because there is uncertainty already. So there's uncertainty on this bar itself, I get out. A lot of people do not understand this. They say, if you don't get out, you return all your profit. And see that you retrace. Huh? This is very obvious. It's actually, to some extent, there's no brainer. Why? Because COVID. Aeroplane cannot fly. S engineer will be badly affected. So here I set my alert 270, check short, 24th January. I put $2 sign. This is for short. It trigger 28 right here. Stock trade sideways, eventually plunge 45%. So this is no brainer. All right, just during the time, Thai beverage collapse. Why? Nobody can go out and drink beer, right? Thai beverage collapse. So many stock collapse. So it's very easy to trade, despite the fact that the market is no good. So bull market, bear market, no problem. Huh? So remember, we are in the bear market now, COVID. This is Mentec. I set by earlier 29 cents, 15th of June. It triggers 18, 3 days later. All right, over the weekend, Monday it triggered. Stock move up, 200% gain. Happy to remember, you can take photo of this. I pause it for a second. You can take a photo of this, all right? This is alert. That is not high side. This alert I cannot go and fabricate. This is from the telco, all right? Okay. $0.29, precise entry price. And you know it, 15, trigger 18, 3 days later. This is a Hong Kong stock Fuyao glass. I set by alert 42.45. It got trigger here. In fact, it trigger was 31st, which is this bar. On the day it triggered, I didn't die. Why? Because the volume very low. So it could be a false breakout. 31st is a half day in Hong Kong. So I wait until the next day. It take out the high on the 4th of January, I go long. And over here, I know this is the end already. I get up. There's abnormality. All right. So you notice, I actually look at the price action. I look at the psychology behind the bar. A lot of people look at this. How do we know to get up? They have difficulty. I mentioned before, thought everybody can talk. This is how we trade SPH. Based on fundamental, not strong. I set by alert 129, 25th. It triggered next day 29, right here. Stock has a strong move, pull back, but did not hit my stop loss. Finally, over here, it recovered. And 196, I get up. 52%. A lot of people say, CK, you can manage to get out here without suffering the gap. No, because I set alert to get out also. 196 going down, check. 16 April. You trigger 3 days later on the 19th. So I know already I set alert 3 days before to get up when it hit. So I don't suffer this loss here. Right? Okay, so I set alert for in, for out. Sengkok, I mentioned one of the best performing stock. I'm not too sure anybody here trade. I set by alert at 203, 3rd of January. It triggered for one next day. Power up. Here I get up. 46%. Okay. Again, to get out, I set alert. This is 296. Watch to take profit 13. Trigger on the 19th. I get out. Some people will notice I said test upper channel line. What is this? This is a channel. So it tests the upper channel line. I decided to get out. All right. This is a weak test. Fail. Gone. All right. So this is what we do day in, day out. Huh? A lot of people don't trade best work. This is a very easy trade. A lot of people like to look at this, look at other market, but the local market got this type of gem they cannot see. Right? Take a look. 215, small dip, check long, add position right here. Because I already have this position, so here is for me to add. I set alert to get out 253. Test high volume resistance. Check to take profit 20th of January. Trigger 6 right here. There's a high volume resistance. So on this day, 253, I get up. The stock eventually collapsed. Subsequently recover, we go back in again. I don't know, not too sure whether anybody here trade. Anybody trade these stocks? It's going to be taken private, no? Later I'll show you. So when you have too many opinions, you cannot trade well. IFAS. Take a look here. 694. Check long. 6 November. Trigger 7 November. Next day. This is a contraction setup, we call it. Over here we get up. This is an exhaustion move. Gone already. 22%. A lot of people look at this, they don't know this gone. They're just so blurred, they don't know what's going on. And then eventually it went down, collapsed, return all their profit. Right? This stock right now is struggling, trying to recover, struggling. So we achieved two things. So you notice I show you the past right to the present for a simple reason. Do not have too many opinions about stocks. We have too many opinions. You cannot see the big picture. You cannot see the message the stock is trying to tell you. Yeah. So can you understand why just now I mentioned those top traders? They make money without understanding what happened tomorrow. So generally, I just trade like that. So remember, you achieve two things. Which stock to buy, which stock to sell short. Precise entry price before the market open. So before the market open, you're calm, confident, and composed. Good or great? Right. Are you more confident, more composed, more calm? Yes. Of course, you say, so what if I know? Let me show you again from the past right to the present. I show you for a very good reason. 208. You tell me, is it a bull or bear market? I'm not too sure whether you're in the market at that time. This is worse than the COVID, no? This is worse than the COVID because the bank refused to lend money. Banks supposed to provide the lifeline for company, for businesses. They refused to lend money. The economy was completely hot. It's worse than COVID crisis. So I don't know whether remember. Now remember, this is crisis, subprime. I receive a thank you email. We have a crisis, I receive a thank you email. I'm not shorted the market. I came in for in the trading competition with a return more than 200%. More than 200% is more than 200,000. I highlight Patrico for three simple reasons. Number one, he has never shorted before. Number two, 61-year retiree. Number three, when he come and learn from us, he learned from us quietly. Without informing his son. Why? Because the son is a fund manager. So he don't want to offend his son. He quietly learned from us. And during the crisis, during the subprime crisis, make 200,000. He appeared in my office without announcing and tell me, CK, I want to buy you lunch. And brought me next door hotel, eat lunch. And during lunch, he told me the son is a fund manager. I almost choked. Now, good news, very good control. So he eventually told the son about it. The son couldn't believe it, can't visit me. Asked me a lot of questions, but eventually became my student. I look at his name card. My God. CPA, CFA, MBA, one string of degree, but cannot make money. All right? And he came because the father made money. Well, he cannot make money. Next, I'll show you this gentleman. His name is Kenny. I show you Kenny because you may know him. This gentleman is a seminar junkie. I would say that he practically attend all the workshops in Singapore. All the workshop. Now, again, I never solicit the email he was sent to me by himself. I never asked my students to send me any of this type of thing. Okay? Because I do not like to do this type of stuff. All right, his name is Kenny Lim Chikun, and he said this is 2014, 10 years ago. I attend back in 2011. Based on HSR principle, return pretty decent. Pretty decent. In that 3 years, he enclosed four spreadsheets. The last spreadsheet is actually open an account in IG Market in June to focus on short. So there are four spreadsheets. First year, he makes 77,000. First year. Second year, he made 39,000. Third year, he made 32,000. And the third year, he actually has an account. He actually do shorting 13,000. So third year, he made 50,000. Total, he made 153. He started with a capital of 100,000, 153,000 in 3 years. 3 year, 153% return. All right. And I'm very happy for him. In one year, he came to me, 1 year before the COVID, he came to my office, give me mooncake. And thank me for the help and all those things. And he told me in one of the years, he made 2 times his annual salary. This guy is a senior executive, so I think he probably make, I guess, 200,000 a year. So 2 times his annual salary means in one of the year, he made 400,000. All right? And I'm very happy for him. So this person would have already made $1 million. Next, I'll show you this small recent. This is COVID. Cynthia wrote to me about trading stop loss on Willie chart. I'm currently sitting in profitable short. You notice a short got S. He only make one example, Samcorp. He was asking me about stop loss on Willie. I reply her. He said, got it, CK. Really glad to attend your course last year. Got to experience current market on with useful knowledge and technique of trading. So he's very happy he was able to short the market. So you got to remember this, bull market, you should be happy. Bear market, equally happy. You don't need to know what happened tomorrow. The system just tell you, this one's too short, this one's too long. Is it okay? So bull bear, okay one. This is Sarah. Again, bear market. This is the COVID. On a very personal, I want to extend my deepest gratitude to you putting yourself out there to help people. In my 2 months in the broking firm, I make 70,000. All right. And look at the last statement. I never felt this gratified. I never used this approach in the past. This lady is a fund manager. He never used this approach in the past. Of course, a fund manager don't do what I do. He quit a fund manager job, become a prop trader at the broking firm, which I block off. In that 2 months, he makes 70,000. Very happy for her. All right. Now, all these students has basically have this impressive result because of this Mastering Explosive Swing program. Let me run through with you. In this program, we capture short-term explosive move and write the leader for outside gain. This is medium term, this is short term. So this is cash flow, this is capital appreciation. And we achieve this through the market leader. We call it a champion stock. Now, in the program, we're going to teach you how to find the stock, to long, to short. Not any stock, champion stock. Timing just right, not too early, not too late. Why? Because it affects your psychology. We're going to look at a setup. If you understand the setup, you understand the breakout. So I'm going to teach you the setup pattern. Okay? 3 critical numbers you must know before any position. If you don't have this number, you're probably gambling already. How to write the champion stock for outside gain. So this is for medium term. All right, to write through the whole move. Now, it's comprehensive. We cover both short-term and medium-term, which I'll show you. Practical, easy to understand. I make it simple. Requires some time. I cut down the time required. I'm going to do a quick demo. Now, you be able to see this. I've just shared the charts. Okay. Now, this belongs to Share Investor. It doesn't belong to me. I just make use of it. Share Investor Station. Share Investor, I'm sure you're familiar with them. They're the one who organize Invest Fair every year. These are the markets that we have: Singapore, Malaysia, Hong Kong, Thailand, Indonesia, Australia, and US. NYSE, NASDAQ, NYSE America, S&P 500. Singapore. We go to this folder called Asia Charts. Now remember, this is unique to Asia Charts. Unique for the MES. SGX, Asia Charts. All right, look for this MES, which is this one, swing. So you notice you got week, you got daily and weekly one. All right, so daily is for short term, weekly is for longer term. So it doesn't matter. So what happened was that from here itself, straight away, I can recognize already. Okay, take a look. This is dated 23rd, which is today. At what time? 18:30, 6:30, 1.5 hours after market close. The server will screen the result, and these are the answer. We prepare ourselves today for tomorrow. Okay, so this is market close 6:30. So over here, I have a series of stock here, Genting. Notice over here, Genting, I have an alert price called 945. What does it mean? It means if Genting were to break 945, I'm going to buy. I know the answer today now. So I know the answer beforehand. All right, if you know the answer beforehand, are you very stressed? How can you be stressed? This is called a contraction setup. I'm going to buy when it break this. 945 right here. I know the answer. Yeah, 945. It is called a contraction setup. So I know the answer today in case tomorrow break up. Maybe next week break out. It doesn't matter, but I know the answer already. Is it okay? So likewise for dynamic, I know it's 425. So I stand by here. I wait. All right, I know the answer before. 425 is right. Yeah. Okay. So this is how I know. Buvitama, I know it's 785. All right. Now to actually make it simple, I created a template. Whenever there's a break, there is arrow. So I know there is a break already. All right, but important thing, I know the answer beforehand. Okay, so you will also know the answer beforehand. And very important also, you can use any charting software. Why? Because there's no indicator except moving average only. All right, and all charting software would have that as well. So you are free to use any kind of charting software. Huh? Now, does it stop here? No, let me just show you. Okay. So this is my website. Okay. You go to the member site. Every week I do video. So this happens to be a posting which I did. I just want to show you. So Buvitama, all right, I know the answer beforehand. Buvitama, I know the answer beforehand. All right, 15th of June. All right, 15th of June, I know the answer. It actually break out subsequently. All right, here, right here. So we actually know beforehand. So that is how we actually are able to actually trade confidently because we know the answer beforehand. So let me just change this. All right, for the weekly chart. All right, same thing. It break here. It's run up. So we know the answer beforehand. All right. So for longer term, for shorter term, also have. All right, to suit your style and your time that you have. Okay, so we actually know beforehand and we are prepared. Okay. Now it doesn't stop there. All right, it doesn't stop there. So we are now preparing, but you notice there's deep correction. Am I right? So you notice we have very deep corrections. All right. So take a look at this posting. All right. Stop broke, blah, 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 21st. Now take a look here. Approaching high volume resistance, 79 cents, 79 cents. This is a convenient place to lock in some profit and closing manage. So I tell people to actually get out, 79 cents. So you take a look here. Yeah, correct. So it may go sideways. It will take some time before you break this. All right, right now we have a price, but it's going to be a distance away. It will take some time, maybe a few weeks. Is it okay? So I already want to take profit here, 79 cents. Is it okay? So of course, some people may not know, hey, why like that? It's like that one. When you can understand the language of the market, it make a lot of difference. But a lot of people have problem. They don't understand. So that is the problem. Okay. Now, to really help you to appreciate a little bit better, I'd like to show you further example. Now, let's take a look at this report. This report was in the past. Now it's 23rd April. This is 9th of April. Take note, 9th of April. Okay. Samudara was detected, 83 cents. Remember that? 83 cents, Samudara. So this is Samudara. Remember the date, All right. 9th of April. This is April. 9 is here. This is 9th of April. You can see the date in the yellow box. So 9th of April, I know the answer. The answer is what? 83 cents. Where is 83 cents? Yeah. Yeah. All right. I'll show you this again. Samudara. Now April. 83 cents. Samudara. All right. Yeah. Now April. This line here is 83 cents. Next day, breakout already. All right. Again, let me just put this thing for you. So notice when you break out, there's an arrow. You understand this? So just to actually highlight to you so you can appreciate a little bit better. We know the answer beforehand. Okay? And in case you think you just stop there, no. No, let me just show you. 28 March. 28 March. So remember just now April. So remember just now is April. 28 March. Samudara, mapping out a very nice consolidation pattern. So this is something you would like to actually observe closely. Notice after the attempt at this resistance, there's a pullback on lower volume. So I'd like to see if we actually take out this 785. Very clearly, I mentioned already, 785. When you look for this break, 785. So 785 was broken. Am I here? Way before. And this was the one I mentioned again in the report. So we actually know beforehand already. Now, of course, the question is, how come we know? All right, that's important because if you understand the language of the market, it's easy to understand. Of course, if you don't understand the language of the market, it's going to be very tough. Okay, let me just share with you something. Okay, because stock is cheap, everybody also can talk, huh? On the 19th of January, 19th of January, it's 19th of January. Now it's April already. Talk, everybody can talk. All right. But in 19th of January, I already tell people already. Nineteenth of January. 19th of January. Food Empire. I've been consolidating for a long while. And this is an ascending triangle. I'd like to see what happens. I'd like to see take out this decisively 118, 119. So very clearly, break 118, 119. Food Empire. I'm going to show you right now. One one eight, 119. This 115, 118, 119 is right here. So I mentioned at the time was on 19th of January. This is January, 19th of January. Here, 19. Next day break already. See the way you run. 1, 2, 3. All right. And I tell people it's gone already. If it's not, you return a lot of profit. Of course, some people say, this one's very strong, fundamental very good. To me, no use already. I don't care. I just take my profit here. So I also warn people that this stock is gone. Okay, let me just show you. So what happened was that on the 21st of March, I did a posting and I told the student, okay, so this is not high side on the 21st of March. Now in April, right? 21st of March. I put all this thing. It's gone already. It broke this line. It broke this 137. It's gone already. See, it broke support. I mentioned already. When did I tell people? March. Now April already, no? All right, April already. Gone. How do I know? Because the chart talked to us. Clear with this, no? Now, I want to show you something more recent. Recently, any of the blue chip run, ladies and gentlemen, y'all very modest there. Y'all may know, but keep quiet. Can somebody tell me a very obvious blue chip, bank-related one? Anybody? Bank-related one. Let's take a look at the three bank stocks. Mentioned previously that actually the three bank stocks actually map out very obvious consolidation patterns. It is quite evident to look at weekly. On the daily charts, it's probably quite messy. All right, so take a look at the weekly charts. So this is what happened. Now, after this attempt break, there's a pullback. Look for decisive break above this high here, 34.26. In any of these break, what is the price? 34.26. Now it's adjusted because they just went bonus. But remember this pattern. Remember this pattern. Okay? Remember this pattern. You notice the price is precise one. It's not gut feel. It's not gut feel. Here, this is the one. Yes, very strong, powerful move. And never mind, got bonus some more. This stock already went ex-dividend, no. OCBC, UOB, not yet. So this is the strongest of the three bank stock. And to help, besides doing the video, I also follow up and tell them, see the debrief video I mentioned already. This one break 34.26. It's mentioned break. All right. You don't have to buy a lot. Okay. Don't need. Just buy a few. All right. Just buy a few lot. We good enough. All right. Of course, you got deeper pocket. It's okay. So you notice this is not high side. All right. Let me continue. Let me continue. OCBC. OCBC. Again, you map out a consolidation patterns. All right, look for decisive break above this high here, which is at 1345. 1345 OCBC. Where is this? Here. Here. I got too many lines. Let me erase everything. Here. All right. And it move up. You don't buy too early. Buy too early, the stock don't perform. Then you're a waste of time. Then you get frustrated. Then when it's not really perform, you're out already. All right. So this is actually how I actually guide the student. Remember, this is not high side, no. It's not high side. And I mentioned already, which is the best performing stock last year. All right. It's the best performing stock last year. Maybe just continue, huh? This is Dynamac mentioned in the previous videos. We have a very nice run up for a pullback or lower volume, and the stock actually broke out today above this high here of 32 cents. Now, if you miss this breakout, look for pullback and look for new setups to go along. So remember, it's 32 cents. I'd like to actually show you right now. This stock we've been trading since last year, no? All right. Let me just put this thing for you to see. So here, this is the 32 cent break here, the arrow, subsequently break here. And this one I also post again. And I told the student, watch out if you miss. If you miss, never mind. Don't chase, but wait for the next setup. All right? Because if you chase, then you got problem. Don't chase. So I told the students, all right, not to chase. Now, remember this. This is, all right, posted on the 7th of March. Let me see, where is my 12th of March? Sorry, 1st of March. Yeah. I posted on the 12th of March. Sorry. Can you see this? All right, the stock traded too doji on low volume after break. This is a sign of rest. Like to see the stock clear the recent high of 33 cents decisively. 33 cents decisively. Where is this 33 cents? Here. Here. This line here I draw. All right, 33 cents. It break. Run. All right, so this is here. This. Can you see this dotted line I draw? So it's not high side, no. Okay, so this is something which we actually do day in, day out, and the stock has performed very well and been running for quite some time. And this was the best performing stock last year. All right, it may actually again perform very well this year. So whatever the case, just to actually quickly run through, this is S&P 500. S&P 500, again, you have the fall report, right? Long. You look at the long for US right now, S&P 500. S&P 500 component stock, there are only 3 can long on the short term. Only these 3. All right. And all these three, how many stock you know? You probably know GE. Okay. So here we have a setup for this Bungie Global. You have EOG. Let me just put in the arrow for you. All right. So very nice breakout. Let me just put this thing and put it side by side now. All right. Very nice breakout. You have the GE Aerospace. All right. Very nice move at GE. But a lot of people won't believe GE can perform well. It performed a lot better than many of the common stocks that you probably are more familiar with. Okay. So some of the stock more volatile, so it's better to actually look at it in a longer time frame, and especially some people have difficulty, staying up right at night. So you'll be able to just set the thing and then go back to sleep. So let's say, for example, this is Eli Lilly, and this stock got set up, right? Eli Lilly, Nvidia. Right now, get out already. In fact, I did the posting. I told the student about it. The student also understand. Let me just show you the posting done by the student. Okay, this check. I just did the posting and tell the student, and they understand. All right, the stock here, it's gone already. This is stopping till bullish gap. This gap is covered. This gap itself is a part of support. The student actually mentioned that. Yeah, neckline, it gone. All right, so in the short term, it's not likely to perform. So don't go and chase stocks. So this is something which a lot of students actually know themselves. Now, but I augment that with the support. So people will know that one of the stocks to actually look out for. Clear with this? But they are still a very strong one. Let me just show you so that you can understand. Okay, so this is the weekly long. Okay, so you notice Nvidia's here on the weekly is still okay. Still there on the weekly. Here we have AIG rather. All right, so this is AIG. All right, they are okay. All right, you have this Emerald Praise. So these are the stock actually doing well, no? Okay. So you can see right at the bottoms, some of the more common stock, Amazon. You can see Applied Material. So these are the stocks that are actually doing okay. Alphabet also. You can see that, Alphabet. So, but important thing, there is alert price. There are alert price. So we know beforehand. So we are not stressed out. So that is the key objectives now. So it doesn't matter whether Malaysia or Hong Kong is the same, all right? Or US, it doesn't matter. We know the answer beforehand. So you choose the market that most suit your lifestyle and the time commitment. Now, just now I asked you to try to remember for me the stocks that actually performed extremely well during the COVID. Can anybody remember the name of the stock? I even asked you to take photograph of the alert. The medical stock, start with M1. Anybody can remember in Singapore? Because the market was down 20%, but this stock went up 1,000 over percent. Can you remember? Let me show you. It's not hindsight, 17th of June 2020, when the market was so bad. I mentioned about Mentec.
Now, Mentec had quite similar patterns as Riverstone's run-ups, and right now it's just hugging below the resistance level. Like to see break above the high here of 29 cents.
Very clear. This was 29 cent alert. I asked you to take photograph, remember? This is how the stock actually traded. Only one setup. If you miss me, you miss for good. But that ran up 200%. No? Okay, so no more setup. And the price collapsed 50% before it recovered, 30th July.
Let's take a look at Mentec. This is by far the best performing stock this year in terms of percentage gain. Notice this is what I mean by a sharp collapse in price, and usually tend to trade sideways, very much like what we have seen here. Right, but right now it's actually attempting at this resistance here. If you can pull back from here, that'll be good, and eventually take it a short at this recent high here of 965.
It's precise entry. This is 7 August before National Day.
Mentec, this stock has run ahead and is experiencing pullback the last two sessions. Again, to be good if you can just trade sideways closer to daylight and eventually look for a break on the upside above the high of 105. Important if you can stay above $1, which is a psychological resistance.
This is how the stock actually traded. So remember, we have the setup before we actually trade. We know the answer beforehand. See, I know the answer here, 7 August, we trade only on the 12 August. It's 100%. This stock has 3 trades, and the total gain is 1,600%. And this is not high side. So you can see, when you know the answer beforehand, you're calm, confident, and composed. And not only this, with all the necessary guidance, all right, you can see why so many of students are so happy. Let's look at some of the feedback. Now, this is Yo Boon Huat. I purposely actually selected some of those feedback. This is Yo Boon Huat. Now, take a look what he wrote here. I wish I come 10 years ago, pay CK 3 times the tuition fees. Why you pay me so much? Because you can always get back 100 times. A lot of people cannot actually see this. You must understand that actually, whatever you invest in the market, you want to get return. All right? But you've got to invest in yourself first. And this person said, you wish you come 10 years ago. Meaning he should have come long time ago. Now, this one here, I purposely highlight. All right, Olive, because Olive is a retired teacher. She only learned when she retired. Must attend, not 1, 2, 3 exclamation marks. See the strong emphasis. No regret coming. Very grateful, very thankful. Take a look over here. You wrote, it make entry exit of stock timing like playing arcade game so simple. So, in our opinion, it is easy, no? I make it simple for you. I don't want to say it's as easy as what she mentioned here, but this lady actually did find it easier. Huh? Now, this is Lee Chun Long. Lee Chun Long wrote this. I wish to come in earlier. Those younger than me, you should come. Those same age as me, no excuse, don't come. Those older than me, I don't know why you don't come. I'm 21 years old. Anybody younger than 21, seriously? Don't have, right? And he said, I don't know why you still don't come. To him, this is must attend one. Don't need to think. Don't need. It's something like a no-brainer thing. That's the reason why he wrote there. In fact, I'm very envious of him. Why? He's only 21 there. And he said, I wish I come in earlier. I only get serious when I already way past this there. Way past this there. So this gentleman has a lot of bright future for him. Now, of course, somebody will say this is a youngster, greenhorn, he know nothing. I'm an old hand in the market. Let's take a look at this gentleman, William Bock. William Bock is a prop trader. What is a prop trader? Prop trader is a proprietary traders in the broking firm. Okay? They trade with no commission, man. But they share the profit with the house. And they are given very high margin. Okay? But trade with no commission. And this person has been a prop trader for 17 years. 17 years. But he still attend workshop. This is a professional trader, no? He still attend workshop. After attend, he wrote this, must attend. Now, in my program, it's good enough for a professional. Is it good enough for you? I'm sure it does. Next, take a look at this gentleman. His name is Sean Ring. All right, if you look at a lot of this person, do you think he's a local or foreigner? This is an Amor. He's a foreigner. He's an American. All right. His name is Sean Ring. He's a chartered financial analyst trainer. If you want to be an analyst, you need this qualification. He happens to be the trainer. All right. He's a trainer. And before that, he was vice president Credit Suisse. By anybody's standard, this is a expert from the industry. Is it correct? Now, this expert still attend my course. After attending a course, he wrote this. I wish I was taught 10 years ago. I said, my God, if the trainer said this, I mean, CFA got not much value in it. As far as making money from the market. You can be an analyst, but not necessarily you can make money. Because if it's, then why would the trainer himself say this? So to me, when he wrote this attempt, I was always shocked. Now, a lot of people say we must attend the Amor class. No, the Amor attend my class. This is not the only Amor. We have one Norwegian here. We have one, this is a French guy, and this is a British guy. There are 4 Amor in this class. All right? Now, most of the participants, after attending, they all have regretted not coming to the course earlier. They all say the same thing. I should be here earlier, should have been here. All say, every batch of people say something like this. And the last one is even worse. The last one is a reminder. Scream, no. You don't know. He scream. Can you see the frustration they have gone through? No? Because no, they don't have clarity. We got too much information. We call it the what? Froth. All right. You cannot see the real message from the market. That's the problem. Huh? Now, when you tell this webinar, right, they always give you money back guarantee. I don't like to do such thing. You make my hair stand. I don't like to do such thing. Really, by telling you my hair already stand goose pimples. All right. How to guarantee you if you don't even look at a chart? How to guarantee if you don't even do your homework? So to me, that's sales gaming. But I give you a different kind of guarantee. I guarantee you after you finish the workshop, right, you regret not attending earlier. Like all the other students say, you regret not attending earlier. All right. You have missed a lot already. Now, master is listing. Listed price is 2,398. If you think about it, it's $200 a month. As an investor, $200 a month cannot be too much, right? Is it correct? Because your minimum investment in a stock, in a trade is already 10,000. So 200 cannot be that much, right? If you think a bit deeper, it's only a meal a day. A meal a day. So a meal a day for your own investment well-being cannot be too much, right? Is it correct? So again, let me just repeat, 2,398, and you come with the guarantee regret not attending earlier. All right. Now take note of these 3 days, very important, 29th, 30th, and 1st. First day, foundational. Very important. I'll teach you what the characteristic of a sideways market, what's the characteristic of a running market. If you understand this characteristic, it put you in very good position to know where you are. A lot of people don't know. And we're going to discuss market cycle, which I briefly just now run through. On the second day, we're going to teach you the 4 setup. If you understand the setup, you understand the breakout. Not all breakout the same. So you will know how to find the price yourself. Is it okay? You'll know, is it 120, is it 150, whatever it is, you know. You know DBS, why the entry price is that price. Why dynamic, the price is that price. You know. You will know how to find the answer yourself. All right, I'll teach you. On the last day, I'm going to teach you how to manage your position. There's no point having a strong stock, but you don't know manage that. You'll return all your profit one. Now, if you have a list of stock to look at, how do you know how to rank them? I will teach you. Improving the odd. How you rank, which one, number 1, number 2, number 3. You will know how to rank by looking at certain things in the chart. Again, no indicators. So, you know, just things are simple. We travel light but effective. Now, all this is to make your portfolio magical. All right. But at this juncture, some people will say, but CK, there are so many educators out there. I already attend some program. I also don't know whether this is suitable for me. I can understand this. I only can share with you what other people has said. This is Jervis Lau, 2014, 10 years ago. Jervis wrote this. The only course in Singapore, so much cost support that makes sure you get back your course. The only course. This person must have attended a lot of courses, right? Somebody may be wondering, wow, maybe the standard has dropped already. Fast forward. Fast forward. Zen Tan. Although I attended other courses elsewhere, CK only one that provides such good support after course. Only one. Again, she can compare, right? Kudos to dedication all this year. So it's referring to the support. All this, I do that consistently for many years already. And I'm very happy he got hired as a trader with the prop firm. Whatever I teach you got commercial value. All right? Really grateful. And I'm very thankful for his kind word. Fast forward. This is Jimmy Yap. I won first Money My Channel News Asia Stock Challenge. Thanks, EK. Cannot block. My student took the screen and give it to me. This is my student. All right. And he actually came in number 1 first. All right. And he write an email to my colleague, Li Peng. I'm wondering whether I could meet up. He insists on buying me lunch. So he came to our office and bought me a hotel next door to eat lunch. Nobody say better than this recent students, all right, recent batch of students. His name is Ng Yao Te. Must attend course, even borrow money from loan shark to attend. So according to Mr. This is non-negotiable. This one is must attend one. That's why his strong emphasis, even you have to borrow money, you need to attend. Now, Mr. just used this for emphasis. He's very rich, came with a wide pay for both. Now, all these students has in the past made a simple decision. They decided to be the 5% that are successful. They decided to be the 5% that do not gamble. They know what they're doing. They decided to be the 5% that win the game. In order to win the race, you have to start the race, but you don't have to be great to start, but you need to start to be great. And all you need to do today is to decide that you want to be successful. Nothing happens until you decide. That you decide you want to be successful. All right. Now, once you decide, right, you experience inner stillness, and your mind becomes very clear. Everything seems to align to support you. Now, remember for today, listed price 2,398. But you don't need to pay this. Why? Because I have good news for you. Right now, this course has been approved by IBF, accredited by IBF. IBF, Institute of Banking Finance. Very stringent requirements we have to meet. And they finally approve our program. I have very good news for you. Singapore citizen PR, you have 50% funding. That means they will pay 50% of the course fees. The balance 50% you pay plus GST is 1,298. Good or great, all designed to help you. Now, if you are Singapore citizen above 40 years of age, your funding will be 70%. So you pay the balance 30 plus GST is 858. Again, good or great, excellent. Only this, it doesn't stop there. If you still got few skill future credit not used, use your skill future to pay. So if you still got 1,000, use 1,000 to pay, you only pay 298. Last year, this time, student paid 2,400. Now remember, I used to charge that for this course before IBF approval. If you still got 1,000 not used and you are above 40, use the 1,000 to pay, you pay 0 cent. Good or great? All designed to help you. All right. This is something I can never imagine. The government right now is arming you with the knowledge. He knows it's difficult for some of them, but he now give you the sponsorship. You only pay very minimum. Some of them don't even have to pay. Everything covered. What you need to do right now is to just scan this QR code or click on the link that CyberCode has posted. Click on that link with CyberCode supported and complete the registration form. I'll show you. It's very straightforward. What you need to do is just select the course date. There's only one course date, your name, email, citizen, just select Singapore. I see very important, government have to verify your age, contact number, date of birth. Straightforward. Next page, just continue. Somewhere over here, payment method, click Skill Future. You are using Skill Futures to pay for your course. Is it okay? Now, if any questions, type into the chat box. I will more than happy to help you. Okay, so if any question at all, type in the chat box. I will help you. So I hope that is straightforward. Can you understand, huh? Again, myself and Eddie will be here. So we will help you. If any questions.
CK, there's a question, two questions raised in the Q&A.
Okay, give me a minute. Q&A. All right. No, the reach is no good. Demonstrate using software. Are we getting the software to practice at least the call? Now the softwares you don't have to use. All right, I just use it for demo. You can use any chatting software because in the workshop itself, you'll be actually taught how to find the price. If you notice just now, the chart I show you, there's no indicators. All right, so no indicators at all. Okay. So regards to Kelly Tan, so again, you will be able to know whether the REITs and all those things are, if it's not detected, we won't trade one. All right, and REITs has not been performing very well anyway. Okay, now if it actually perform, if institutions are going to it, then yes. In fact, at one stage itself, I myself also invest in the REITs. All right, but not all REITs can run. You must understand. So don't don't participate in REITs that the institutions or their weak institution sponsorship. Let's say, for example, at one stage it was Parkway, but it's gone already. Right. So at one stage we were actually trading Parkway. Can you see that? We were trading Parkway, all right? I was actually trading this Capital DC REIT, right? But it's gone also. Okay. I was trading here during this period. But it's gone already. So remember, important thing is not to fall in love with stock. How much is the software subscription? Very affordable, $360 a year, $30 a month. It's cheaper than, I don't know, your children tuition fees. All right? And it's cheaper than when you go and see a dentist. Now dentist is very expensive. I'm not too sure whether you agree with me. All right. So let me just go back to the slide. Okay. So remember, you will know how to find the answer. That is my duty. All right. And you're providing support. So in case any question, you can always ask. Okay. Like later on, I will have to answer this student. This student posed the questions. I have not replied here. This student just asked. Hey, sorry, not here. Let me see where is it. Yeah. The student just asked this about OCBC. Okay. Student was asking about this, right, OCBC. So I will reply her later on. So we're going to do this today, 12 o'clock. All right. So yeah. Okay. Well, what platform do you use? Do we need to install it in the PC? Don't need, no platform. So when you say platform, I'm not too sure you're referring to trading platform or charting software. So remember, you're open to use any charting software. Any charting software. Let's say, for example, existing right now, you have a charting software. Just use it because I'm going to teach you how to look at a bar. And there's no proprietary indicator. You understand? There's no like proprietary indicator that you know. The only thing I use is just moving average, which all software would have one. Okay, so there's no platform you need to install. And trading platform, you can use any one, doesn't matter. You want to use Philip Security, Kim Eng, Lim and Tan, IG Market, CFC, is okay. All right, it's all right. Okay, so I hope that answer your questions.
One question in CK, one question in chat billings.
Any test? Oh, okay. Now, because this is government, there is an assessment. Okay, this assessment, multiple choice. Okay. So far nobody failed. No, so far nobody failed. So, and I also guide you one, not to worry. But the important thing, you must pay attention. Pay attention. So as long as you stay in the room, you listen to the lesson, and I'll teach you how to find the answer, and you'll be better on this thing. All right, and it's a multiple choice, so no essay, nothing like this. Okay, and nobody fail. Okay, so even if you fail, right, you're allowed to resit again, retest, to take the assessment again. But I'll show you actually it's multiple choice, so it's very straightforward. And remember, I will guide you. Okay. All right. Anybody has any other questions? So, so what happened was that you click your skill future and you click submit. All right, click submit. So, after you click submit, right, then you should receive an email from Cybercode automatically on. Okay, auto-generated. So, you will receive a PDF copy of the registration form. Is it okay? So just click Skill Future and then click Submit. Okay? And you'll receive an email from Cybercode, which encloses the PDF copy of the registration form. Now, I just want to actually mention briefly, here you got to pay 858 if you're above 40 years of age. Any live trade, unit class. Don't have, we don't have. All right. Actually, you don't need those things also. So I'm not too sure. All right. We're not doing day trading. And day trading is not encouraged by IBF. It is not. IBF wants us to teach you the skill so you know how to trade. All right. How to invest. Clear? And we know the answer beforehand. All right. We know the answer beforehand. So any problem? You already know the answer beforehand. You're prepared already. Clear with this, So remember, let's say you're supposed to pay 858, and you have 1,000 1,000 skill futures credit. So no issue, all right? But in case you don't have 1,000, let's say you have 500, then what happened? Let me just quickly run through. You got 858, okay? And your skill futures credit is, let's say you have 500. You have used some for other thing. So there's a balance of 358, right? Am I right? Balance. Okay, so what happens after you submit already, right? You come back to this form again, the link. Don't fill the thing. Just use any of this button here to pay the balance 358. That's all. So you just come back to the same link, all right? The registration form link, but you don't fill the form again because you already filled. Just use any of this button here to make payment for the balance 358. So I hope that is clear now. All right. So suffice to say, because I did not actually mention, after that we will have meetup now. Andy, I'll just take note. We will have meetup. So you can always like take it as a revision. I will run through again. Any questions, you still contact me. All right. So because there are actually follow-up meetup. So online lah. So again, I'll show you why this stop, why that stop, the kind of thing. So again, from here itself, this is where you are able to ask questions like this student. And this student is actually quite good. You're able to actually find those stocks. So similarly for yourself, you'll be able to actually find those things. And to guide you, I do weekly videos so that, people will know what I'm looking at. Now, just to show you, for example, NVIDIA, right? So NVIDIA was doing something like this, So there's a break. So this break in time, I told the student. So where is this break? Let me just show you. And I will explain one. Let me just remove everything. Okay. Take a look. This one, this break, it ran up from $500 run to $900. All right. So this is the one again. When it happened, and I mentioned actually a shallow pullback, there are reason. All right. So I give the reason. All right. So student will know what to look out for. Okay. So use this as a way to learn. Then I do this to gone already. Don't go and fall in love with stock. Now, how much the correction? Nobody knows. But this is a weak bar. No? Very weak bar. No? It may go down further. Right? So this is something which you will get the benefit. Okay? So let me just press this again. All right. So if any questions, you can ask. Now, some of you may have already attended a lot of courses, right? A lot of courses. And then, of course, it's a valid question. Is it going to be the same thing? All right. Is it going to be the same as some of these courses I attended before? Now, let's just show you this. Now, this is Peter Boo. And Peter Boo wrote this. Finally, a teacher that teaches how to enter and exit trading, something not taught at other training center. Now, I have no idea what other training center, but this person must have attended a lot of courses. Why? Because he used the word finally. A person who attend only 1-2 courses will never use the word finally. That means he must be searching for a long while. And now he said, finally, I found a teacher that teaches how to enter, how to exit. This is not hindsight. All right. So whatever I shared with you just now, I show you the alerts, I show you the video way beforehand, that kind of thing. And he went on to say this. Excellent. It takes a real guru to share his training technique. Real guru. So that means there are a lot of guru out there not real. Otherwise, why you use the word real guru? Okay. Now, where people like this Conrad Chiu, which this is 2021, not too long ago, which I attend this 10 years earlier and start my investing training journey with CK. Again, this person is very late. In his opinion, he actually wasted 10 years already. He should have been here 10 years ago. All right. So I'm not too sure exactly 10 years at the time we have this program. And this is Wu Tian Sing, again, quite recent. And he attended many courses. You can see this. Not found in many seminar, webinar that I have attended. Not found. Whatever I teach, not found. No. So I don't know what other people do. I also don't care what other people do. But based on this student feedback, he attended many courses, but whatever I taught in our course, not found, no, not found. The trainers give new meaning and insight to the thing we learned in the past, which may not be correct. Worse still, if you learn those things, they are not correct, and you are doing the thing not correct. Okay, good questions. How long you have access to the debrief videos? You can the debrief videos we did it similarly for the earlier batch of students who pay full price. You are given 1 year access. All right, more than enough. 1 year access. Okay, so this is the form of like kind of support lah. We make sure that you internalize what you have learned. All right, as long as you put in an effort, 1 year is more than enough. Now, just like I actually mentioned, all right, about this lady. So remember this Sarah Wong? Before that, Sarah actually did, I mentioned that he was a fund manager, he became a trader, and in that 2 months, he actually made 70,000. He sent me another one subsequently, and he actually mentions that his return is more than 200%. Easily, no, he used the word easily. Okay. Now, I'd like to actually share with these particular students, this is quite unique. This person was for SPH. At the time, SPH restructured, so I know he probably may lose a job. So that was in 2017. So, hi Jay, what about job cut SPH? Hope everything's well with you. And he replied, thanks CK for the concern. I'm good for now. I know I can always trade for a living. Thanks for coaching me. You can always trade for a living. All right, now next year. Great to hear that. Take care. Thank you. You have taught me well. I have the tools to keep me alive. You use very strong word. In fact, this is the real value there. Real value. Tools to keep him alive. So subsequently, when they restructure, I don't need to text him. All right? He know what to do. Huh? All right. Any other questions? Anybody? All right. If there's something you're thinking about running through your mind, all right, feel free to actually type into the chat box.
CK, I think I'm not too sure whether the Andy Tan who raised the one live trading. Do you answer that already?
Answer already.
Answer already. Yeah. Okay.
Yeah.
And then there's another one. Anomalous attendees. Was a Q&A.
Yes. If you use the software, we just extend to you as a form of service. Another attendee. All right. We just extend you accordingly. If you all right. As an added service. I'm just adopting what I currently practice for many years. So yeah. So I don't want to differentiate. Yeah. So it will be given to you. Yeah. So I hope that help you. Okay. So again, if the things that is running through your mind and you're not too sure, feel free to actually ask. I'll be more than happy to actually help you. Some of y'all may have attended this before. Maybe they still have some doubt. It's okay. At least if I understand, I can help to clarify now. Okay. Some people is very concerned that maybe I'm too old to learn. So don't see it this way. I'd like to actually share with you. I got this student who is almost 70 years old. Fiona. Good evening. Happy New Year. Now, this lady, that time before COVID, every time New Year bring goodies to my office. Many thanks for heads up GSS. I read your posting this morning and I put in my trade alert, so I had to go in when it broke up. Because a high volume extension bar, I decided to sell at 118 so I can sleep better, and it's a good start. This is a 70-year-old lady. What is this high volume extension bar? You may not understand, right? This is what happened. All right, I mentioned about the stocks here. He actually entered the trade, and here he actually get up. All right. If don't, you return profit. So we start trading here. All right, and this is our extension bar. We actually get up. If not, you return a quite significant amount of profit. And he actually knew us much earlier, and he actually mentioned that knowing you, Asia Charts has been a real blessing, and I feel very touched by his kind words. Right, and this inspired me to actually help. Okay. Now remember, you are here today, I'm sure it's not because you come here to pass time. I think you're interested in investing and trading. And if you have been in the market for a while, sometimes you feel that it's a glass ceiling. You're trying to actually break through to another level. But somehow there is this plateau effect. There's a glass ceiling. So this may be a challenge to you. So here we are trying to actually help you to actually break through and go to a next level. So this is something which I feel that there's no better time than now. For the basic reason, because this course got approved only recently, not too long ago. And this sponsorship may not be there forever. Okay. Eventually it may be removed. So, or even reduce. So it's important for you to actually take advantage of this right now before it's actually removed. And right now, you may not even have to pay a single cent or pay very little. So the greatest challenge in most people's mind is actually removed. So I'm not too sure what else you have, but I think this is the greatest challenge. All right, the cost consideration, but it's literally not there anymore. It's literally not there. So don't waste this opportunity, because once it's removed, we have to actually put this back. No? And this exactly happened last year before it was approved. Student pay 2004. Okay, student pay 2004. Like for example, this group of students here. Right. Anyway, this is Sarah, the one who actually quit the fund manager job. This lady here on the left side. So they all pay 2004. Okay. Cash, no? Not sponsorship. Huh? All right. So again, this is a rare opportunity. So you want to actually use it before you actually remove. And I feel that actually learning this skill is extremely important. Let me just share with you why, in my opinion, is extremely important. Because actually I learned the hard way, thinking that perhaps other people can help me, the experts so-called, in my wife banks. But I realized nobody's more interested than yourself. And during the time when I do the research, I discovered something like this. This is Mark Douglas, synonymous with the expert in trading psychology. And from his book, I actually extracted the largest group of consistent loser is composed primarily of doctor, lawyer, engineer, scientist, CEO, wealthy, retired entrepreneur. I just pause here for you to think and reflect. I can paraphrase this. The largest group of consistent loser is composed primarily of the very intelligent people in our society. Why the very intelligent people cannot make it? They are so intelligent, why cannot make it? You think about it, these are all very intelligent, but they are consistent losers. So straight away, I actually tell you one thing already. There must be something else. Because these are intelligent people, but they use the wrong map. Many people use the wrong map, but because they are rich, that's right, they can lose a lot more money. Okay? So if you're interested in the markets, but you're using a wrong map, you'll never reach your destination. Period. So, but if you are serious about it, arm yourself with the right map. Arm yourself with the right map. You have seen the chart before, but you have not seen the hidden message behind the chart. And you're very confused. Why is like that? It is like that. All right? Because market has its own language. Once you understand the market, then you will be like many of the students, regret not knowing earlier. No? Right? And many of the students are so-called from the industry. When I say from the industry, means what? Like fund manager, Sarah is a fund manager. CFA trainer, remember Sean Ring? CFA trainer, used to be vice president Credit Suisse. Prop traders, all right, William Mock, prop traders, professional traders, reminds you a lot reminds you. All right, fund manager. All right, my very first fund manager student is a French guy. That's very unusual. All right, he's fund manager, but cannot make it. So you think about it. You want to reap returns, arm yourself with the right knowledge. So we're here actually providing all this necessary to make sure eventually you remove all the thing from the shaft, you can see things clearly. Otherwise, you become very hazy and you don't understand what's going on. All right? Any other questions? Now it's already 9:21. We probably hold it until 9:25, 4 more minutes. Then we'll close the meeting. But if you have a burning questions, it's important for you to actually seek clarifications while we are still around. Now remember, ultimately end of the day, nothing happened until you decide. But once you decide, it becomes very simple. If you don't decide, that is very stressful, very agonizing, very agonizing. I came across many of my students. They were actually doing this, all right, without proven methods. And until they decide, they were all struggling. And many of them struggled for years. Okay, my oldest student happens to be 88. When he came that time, I also be shocked. 88 years old. Youngest happens to be 14. Sent by Kiasu father. Right, Kiasu father. Okay? No, it's different. All right, this program is managing explosive swing. Dynamic bank is different thing. Dynamic bank is very software based. You need the software. Without software, you can't use dynamic bank. These programs not dependent on any software. The important thing that this program is sponsored is IBF. That is the key thing. All right, this is the key thing. Any more questions before we close the meeting? All right, last few minutes. If you have any burning questions, be good to actually let us know. Or if you wish to, you can actually send it directly to me. All right. Now, just before that, I'd like to actually show you how you can reach CyberCode. Okay, I will give you the contact. Should you wish to reach Andy, this is the number. Please remember, press option 1, your route to Andy's handphone. If you write to him, then this is the email address. It'd be good if you can take a photo of this. All right, so that you can remember that you have to press option 1. Now remember, in anything we want to do well, is always the start. Anything we want to do well is always the start. Right, do you agree with me? It is the start that a lot of people fail. It is the start that people get stuck. But right now, the government is helping you to get started with literally no out-of-pocket expense. And this is a very rare opportunity. All right? So do not let this slip away. Remember, in the course, I'm not just teaching you some strategy. I want to go beyond that. I want to program your mindset so you do what you know. Because if you don't do what you know, it's the same as you don't know. And that's very sad. And in today's context, it tends to be the case because we are overwhelmed with information. So that's the reason why it's important for you to be able to actually discern what is necessary and what is not necessary. Okay? Now, if there's no further questions, we'll close the meetings and we look forward to seeing you in our coming workshop. Now, remember, if you want to actually, what bring you here will not bring you there to the land of profitability. Okay? Unless you're prepared to actually make the changes and take the actions. So we look forward to seeing you again. Thank you.